It's a historic day in the US with Trump's second inauguration, and I'm here to welcome two gentlemen that I haven't talked to for a long time to break down this historic event, and they're not even in the US. I got Michael Brown with Pepperstone and Richard Matthews with One.io. Gentlemen, how are you? Good to see you both.
Good to see you, Blake. I thought you were going to say it's a historic day because we're joining you again, not because of
Exactly.
some orange bloke in Washington, but never mind.
That does kind of make it a historic day, and it's been a while. Obviously it's been a while since I've seen both of you. So happy New Year to the two of you. We're
Thank
kicking
you.
off this new year with a lot of volatility. As I mentioned, and as we were coming on, this is a pretty historic day in the U.S. President Donald Trump has been reelected. He is being inaugurated today. He's going to be taking his second term. I want to throw it to you, and since everybody is so consumed by this Trump trade and what it means for tariffs in different countries, what does it mean for you guys from the outsiders looking in? What does it mean, and how long can this Trump phenomenon last? So let's take it to you guys.
Well, age before beauty. Come
Thank you very much. Age before beauty. I do have to say that President Nixon was still president when I first started in the market. I checked it out before I came, which shows how long I've been around. I think that Trump is going to be fantastic for the States. I really, really do. Over a 2 year period. So I think all the action is going to be in the next 2 years before you get the midterms, when he's got control and he can do pretty much what he likes. As an outsider, I am, and as you know, I'm half American, so I'm always very pro-America. I'm so upset by the attitude of this country towards Trump and what our government has said in the past, and some of them, the Mayor of London continues to say about him.
Yes.
I think we're absolutely mad not to be looking towards America as not only a friend and an ally, but as a great trading partner. We should be the bridge between America and Europe, but we have got our heads stuck in the sand and looking firmly towards Europe. And I think we'll regret it. And I think we could well get punished for it. And I think the tariffs will come. And if we don't buckle down, the tariffs will continue and they'll get higher.
And let me ask you guys really quick. How effective is the tariffs going to be to the UK? Is it going to be very problematic for your country?
I mean, I think we've got enough headwinds to be dealing with as it is, and I'm sure we'll get onto that later on without having to worry about tariffs on exports of goods and services. I mean, that's just another thing to add to the potentially very, very long laundry list of issues that we face. But I think from a broader perspective, I would just make a couple of points, obviously, on the cusp of Trump coming back into the Oval Office. I think the first thing for market participants, certainly just on a sort of broad level, is we're back to government by tweet. We're back to policy making seemingly on a whim, and also a lot of noise and very little signal in terms of the news reporting. And the reports that we have from the Wall Street Journal today, classic example of that. We're expecting tariffs on day one. All of a sudden, we're not getting tariffs on day one. So I think we're going to be in a much higher degree of policy uncertainty, which you would logically expect will result in a much higher level of cross-asset volatility, because markets are going to find it much more difficult to discount a kind of predictable path that the economy will follow, because there isn't a predictable path. One doesn't really exist. And I think the second thing, just broadly, that I would say is, when you think about Trump, when you think about, ultimately the guy's a businessman, what are his success criteria? What does he look at and say, yeah, I'm doing a good job. Yeah, America's doing well. Well, I think the first thing is where the stock market is. And the second thing is the pace of economic growth. So actually, while we are going to see tariffs and things of that ilk, I think that will be perhaps somewhat offset by Trump's desire to actually keep the market relatively buoyant. And when you look, the bull case is still relatively solid. I don't think Trump is going to want to take a wrecking ball to that with a huge tariff on everyone. Now, I appreciate I could well be proven completely wrong in about 10 minutes' time, given how the administration seems to work. But that would kind of be my base case at the moment. Tariffs are a negotiating tool to bring people to the table rather than anything that would sort of kibosh the economy or the market.
Absolutely. And if you don't come to the table, I'll raise the tariffs until you
do. Yeah, exactly.
Until I get my own way. So I think from that point of view, he will be aggressive. But I also think he's unpredictable geopolitically, which I personally think is a good thing. You don't know how he's going to react. Hamas don't know what he's going to do. They seem to back away quite quickly last week. Hopefully they back away more. I think the same with China, Korea, Russia. I think that the uncertainty is there, which geopolitically you could argue is a good thing.
Yeah.
Okay. Well, I mean, I think you guys are both succinct as far as I always thought that Trump's litmus test on how he's doing is the stock market. I mean, that's his benchmark on how he's doing. Day one, he'll be like, the market was up X amount of percent. I must be doing a great job, type of thing. But let's talk a little bit about tariffs and what it will do to the dollar, because there's a lot of debate on what it'll do to the dollar. And it's obviously well known that the Trump administration is not a fan of having a strong dollar. They don't want a strong dollar policy. I don't think they want to follow that. But how are they supposed to get either or, in your view?
Well, I think firstly you would expect tariffs to mechanically strengthen the dollar purely because they will weaken the other side of that equation, whether it be the loonie, the Chinese renminbi, whatever it may be. We say Trump doesn't like a strong dollar. I'm not sure what Trump likes in terms of foreign exchange policy, to be completely honest with you. But actually, I would say that whether he likes it or not, I think he's going to have to put up with the dollar remaining strong, because when you look at what's going on from a macro perspective, the US economy is growing at 2-3% a quarter, which no one else is getting anywhere close to. The Fed are considerably more hawkish than their G10 peers. We're looking at a skip in January and possibly a prolonged pause, not a hike, before he gets that in. And also you've got that lingering geopolitical risk, which you mentioned, which is probably helping to underpin a bit of demand for the dollar, and also inflows into the S&P, which is vastly outperforming its global peers. So I think whether Trump likes it or not, the dollar is likely to remain relatively firm, if not strengthen further.
But you remember...
Sorry, how can you buy the euro or sterling or,
Sure. No, but I remember vividly from his last term when he started to talk down the dollar. He said the dollar is just too strong, and for the first half or the first 2 years of his term, the dollar did actually weaken, despite him or the Trump administration, imposing a bunch of tariffs the following next couple of years. So I'm wondering if we're going to get some of that rhetoric this time around again.
Yeah, potentially. I mean, I guess it's a balancing act. It depends what participants are focusing on. I mean, if you're focusing purely on the tariffs in isolation, you say dollar positive. If you reach a tipping point where actually those tariffs end up, economically speaking, shooting yourself in the foot, then that would be dollar negative, because you bring back upside inflation and downside growth risks as a result. So I guess it's that balance between at what point do tariffs go from being, as we said, a sort of clever negotiating tactic to actually being potentially self-defeating, and on which side of that dividing line you sit at any given time.
And I think there's quite an interesting dividing line on inflation as well, whether tariffs do drive inflation. There's an argument that it does. But also deportation of immigrants, I suspect, might drive inflation as well.
I think that would probably drive it more significantly as well, actually.
Yeah, and that's a whole nother topic on how the U.S. is going to deal with Canada and Mexico, mostly obviously Mexico, because there's a lot of lingering issues that I think between the two, and just the Gulf of America that's going to obviously be renamed today,
and Canada is going to become America, isn't it?
Right, the 51st state. It's going to be an interesting 4 years. I have to admit
and
that.
Greenland.
And Greenland and Iceland.
I wish you'd take this country over.
Well, yeah, I was just
I'd be really, really happy to have someone who believes in his country, make Great Britain great again. Words you don't hear here at all. All you hear is doom and gloom. We're in such a mess. This is dreadful. This is shocking.
Well, speaking of which, I wanted to ask you guys, because I know you're so bullish on the UK economy. Let's talk a little bit about the scare that we've seen recently in the in gilt yields and sterling came under pressure. I mean, this must mean that you guys are very, very bullish sterling at this point, right? Right?
No.
Well,
No. Can I just preface this very briefly by
Yes.
saying that everything I'm about to say over the next 3 or 4 minutes, I would be absolutely chuffed and as happy as a sandboy if I was completely and utterly wrong at the end of the year. Because
Oh, I'm so excited for the next 3 or 4 minutes. Let's go.
Because like you said, I want the country to do well.
Yeah,
You want to see the economy doing well, you want to see the market doing well, you want to see your currency strong. I just can't see it. As you said, we saw that wobble in the gilt market a couple of weeks ago. 10-year yields are the highest since 2008. 30-year yields the highest since 1998. By which point he'd already done 3 decades in the city, probably.
25 years. I've done my first quarter of a century.
Close enough. And obviously the pound moving in the opposite direction. And I think that's just a clear sign that the market has lost confidence in the government's ability to get a hold of what is a very fragile fiscal situation here in the UK. We've got pretty much no economic growth. We've got high and sticky and stubborn inflation. The consumer seems pretty depressed, judging by the grim retail sales figures that we got on Friday. And the Chancellor, who left herself about £10 billion worth of headroom against the fiscal rules in October. I think you can now measure that headroom in pence, given how minuscule it is. So really, you're looking at a situation where the market's saying, we want to see how you're going to balance the books. There's 3 ways you can do it. You can either increase borrowing, which is absolutely never going to happen because the market would properly throw a tantrum at that point. You can increase taxes, which, it would raise revenues, but it would also be another stiff headwind to growth, which is already incredibly anemic. Or you can cut government spending, which, again, would also be a stiff headwind to growth. And I'm sure our viewers in the UK will know that a Labour government has always historically found it very, very difficult to rein in government expenditure. So to cut what is quite a long story very short, I don't really see much reason to be wanting to be long of sterling assets at the moment, whether it be the pound, whether it be gilts, or whether it be equities.
So, Richard, since we haven't heard from you,
Everyone's now, depressed.
I want to hear the next couple of minutes.
The full case of sterling, but my well-known position, I love sterling.
So let me ask you guys this. I mean, obviously you're very bullish the dollar. You're bullish the U.S. economy. What other economies do you see out there that could, be a beacon of light in the coming months? I mean, is China? Do you think China bounces back? Is the Eurozone going to stabilize? Do you buy Canada because Trudeau is going to be out and a new prime minister is going to be in? Where are the beacons of light?
Mark Carney, is he going to argue he's better than Trudeau? One of your favourites, isn't he?
Don't get me started.
He was so good at the Bank of England.
Just don't go there. I'll get in trouble if I say what I really think.
So where are the other places that you would be looking other than the US, or you're just US dollar bull? I don't care about anything else.
It's up to me. It's hard to see beyond that, isn't it?
Yeah.
Really, spooky. I mean, Europe, I think, in a way, is in a worse position than the UK. You're going to get an ultra right-wing government in both Germany and France. You heard it here first. Eventually, over the next few months, the AfD, I think, will win.
Yeah,
I think Le Pen will be in power in France. You've got Meloni in Italy, so you're going to have a very right-wing Europe. But then, look at Germany, and it's just an absolute nightmare what's happening there. So I can't see any growth in Europe. There might be some odd outliers in Luxembourg on growth in tax evasion or whatever. So I can't see anything in Europe. I can't see anything here. I think Canada's a mess. I mean, just really.
Yeah, the one caveat I would make to that, and I agree.
Argentina.
Oh, well, no, I wasn't going to go quite at that left field. I was going to say that I agree with your outlook in terms of Europe. I think the elections are going to be incredibly protracted, and what we'll probably see is 3 or 4 different parties trying to club together to prevent the the inevitable, which ended up happening anyway, which is the AFD or the National Rally being involved in government somehow. I think the big difference, though, between Europe and the UK at the moment is the ECB can cut quickly and they can cut deep because they don't have that many worries about inflation at the moment. Inflation is basically at 2% in Europe. So the ECB can just cut and cut and cut and do as, if they want to go back to QE, they can go back to QE. If they want to come up with another acronym, they can come up with another acronym. Down the road on Threadneedle Street, Andrew Bailey is sat there going, I would love to cut rates to try and support the economy, but inflation is running at 2.5%. Services inflation is running at 4.5%.
Still better, though.
Still better, but it's not low enough to be delivering significant cuts and throwing caution to the wind. So I think the UK could be a little bit more vulnerable in that respect.
I think that they're coming up with these ludicrous ideas of easing regulation so you can borrow money more easily. It's just like trying to pour money into the system.
Well, that's the question for you guys in the UK. I mean, how do we have another 18 to 24 months of and maybe even longer of a lot of your mortgages resetting? It's really going to be a drag on consumer spending, would be my assumption. Is that a correct statement or assumption?
Yeah, I think they're resetting slightly lower than they were, but I think that they're now trying to encourage people to borrow at 95%. Loan to value, which is a really dangerous precedent they're setting. Is where it all went wrong in 2008.
Yeah, I think the UK property market's probably the dynamic has changed because here in the UK, I know you guys fix your mortgages for a lot longer than we do. Typically in the UK, the longest fix you can get is 5 years. So we've probably only got another year and a half, maybe, of people coming off those really super low rate fixes during COVID. And as Dick just said, we're not at the 6-7% level now. We're sort of more 4.5%. So I think you're right. The risk now, given the potential borrowing changes, is one of negative equity coming in rather than refinancing risk.
But also I think that there's an awful lot of people out there just were paying interest only on their mortgages, never paying back the principal. And again, that they're going to have to come to refinance and go, I thought I paid back the principal. Oh, no, I still owe however many hundred thousand. So I think there's potential for a housing shock there. But actually, I can't see any beacons of light here. Can you?
No.
Sadly, really sadly.
Well, okay. That's sad. I'm sad for you guys. but
not that sad, though.
I was going to say not sad.
He says laughing.
Very, very sad. Okay. Well, let's we didn't really talk about China. Michael, do you have anything to say about China? And I mean, the economy looks.
It's always very tough to gauge, isn't it? Everyone got a little bit overexcitable on Friday because we had some better than expected activity data, but
made up.
Well, exactly how accurate that is anyone's guess. So, yeah, I mean, I think long term China's in real trouble demographically. I mean, I think the birth rate fell for a third year in a row last year, and I think that's China's real problem when you try and move from a production economy to a services economy. When your demographics look like that, it's only going to end one way, I think. But that's not something that's going to happen this year. That's a decade story, I think.
Yeah. Well, I know, Michael, as a single man, you're probably trying to do your best for the UK demographics around your country. Sorry. Okay. I want to ask the two of you guys then, from a trading point of view, what are your best trade setups that you're looking at? We've seen obviously the dollar show a bit of a reversal today based on, the Trump administration saying that they're not going to come out day one. Now we might get executive orders in literally in the next 2 hours. That could all be out the window. But right now we are seeing some dollar weakness. Does it persist? I mean, do you short the euro when it gets to 106? Do you try to short sterling at 125? What are your trades that you guys are thinking of right now? So let's start with you, Richard. We haven't heard your trade setups in a while. So what are you thinking?
Can we just say that we are recording this? I guess he's just sort of walking up to Capitol Hill.
Oh yeah, no, he's literally they're singing right now. I can hear them singing.
Yeah, pre him issuing one of the 200 executive orders. I'd be short of the euro, I'd be short of sterling, I'd want to be long in the dollar, and I'd be long in cryptocurrencies. And I know you guys hate me saying it, but I think that there's an expression of interest in them from the Donald. And I think that actually that they really could boom this year. And you could see some good liquidity coming in. Yeah.
I have a ton of friends that have had a lot of like these smaller coins just explode higher on them and increase wealth by multiples. So, I mean, look, Richard,
I think that sort of trading is just absolute gambling.
Yeah. Oh,
to me, out and out gambling. If you want to, play with your money like that, that's fine. Go down the casino, buy meme coins or meme coins or whatever you want to call them, buy the Donald coin. But I actually think there's something like Bitcoin, which does do decent volumes or big volumes, and now actually is part of the financial infrastructure. You can borrow against Bitcoin, you can use it to trade, you can use it to buy things. So I actually think that there's a fundamental case there. I know you've always laughed at me saying it, but I would look to buy Bitcoin, Ethereum, cryptocurrencies and tuck them away over the next year, because I think that Trump's very, very bullish of them. Oil, I don't know. I think you're going to drill.
Yeah, you would think that oil actually comes under a little bit of pressure. I would think. Yeah. I don't know.
Yeah. Awful thing to say. Stud lumber to rebuild California.
Well, you guys know that you can always go to one.io, reach out and talk to Richard, especially if you want to talk some crypto. But Michael, you love Bitcoin. I know that. So let's talk about what kind of trading you're looking at. What markets would you think we should have on our radar right now?
Yeah, I guess to give, let's do four. One, because I'm going to agree with you on your long dollar view. I'd also want to be long US equity still. Yeah. Just at a broad level, S&P. I think you might actually see the tech sector underperform a bit this year. I wouldn't be surprised if the kind of real economy stocks caught up a little bit, but along the market broadly. I'd also want to be long volatility, I think, because of that higher degree of policy uncertainty that's coming in, and that's cross asset, whether it be equity, fixed income, or foreign exchange. And lastly, just to throw it in there, I'd probably want to be short Gilt as well, because I think there is worse to come on the fiscal front here in the UK.
Would you want to be long in the S&P? Would you want to be long in the 493 and short of the 7?
I'm not sure I'd want to be short 7, but I would.
As a spread,
I'd be happy to be long the 493.
493. Explain to us what you're talking about.
Well, the remainder of the S&P without the Magnificent Seven in it.
Oh, got it. Okay, all right.
You guys, 7 from 500, Blake.
Right. I got it now. I'm like, what are you talking about? Got it.
Yeah.
Got it. All right. Well, gentlemen, it's wonderful catching up with you guys, especially in the new year. I'm going to make sure we try to do this at least once a month, because it's going to be a volatile, crazy time to be in the markets.
Oh boy, yeah.
Yeah. I mean, this is a trader's wet dream over the next 4 years, in my opinion. So what's the best way for traders to follow your work, both of you guys?
Either pepperstone.com, all our research is posted there, or my personal account on Twitter, or X is Mr. M. Brown.
And you can follow me on one.io or on my Twitter account, which is @DickieMatthews with a 5 instead of an S.
I'm gonna hit you up on Twitter and see how you feel about XRP. Got that, Richard? I'm coming for you.
Good.
Glad that was for you, not me.
what about his views on it?
No, I'm going after him with Cardano. So, all right, guys. Hey, it's wonderful to see the both of you. Happy New Year and happy Trump inauguration and happy Martin Luther King holiday for those of you celebrating here in the U.S. And if you liked what you saw here, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of this content. And also jump down in the comments if you have something to say to Mr. Michael Brown or Mr. Richard Matthews. So gentlemen, great to see you both. Thank you so much. And we'll catch up with you in about a month or so.
Right. Soon, man. Cheers, mate. Bye-bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.